what you purchased the asset for. Yep. So where do you want to go? B3. Okay. Why do you use historical cost? Give me one reason. You guys. Why would you use historical cost rather than market value? What? No?
Something about it being like not full value, it's market value, but when you buy it, it's like not full now. Does that make sense? Something like that.
No, not quite. Not quite, yeah?
It loses value over time.
Yes. The main reason you use historical cost is because it's an actual value. Market value is always an estimate. You will never get the full value unless you sell it. Okay, it's only worth as much as someone is willing to pay. And you only get that amount when you actually sell it. Yeah? So market value is always an estimate. Okay? What is going concern?
Making sure your business will give money in the future.
Yep. Where do you want to go?
A1.
Oh, do I circle? Okay. Why is going concern important?
So you can keep your business running.
Keep your business running? Who's it important for?
Oh, the shareholders.
Shareholders, customers, you want to know that the business keeps on running. So you're going to get paid, otherwise it can carry on getting paid. You're going to be able to pay your bills, and potentially you're going to be able to still sell your goods. Okay. What is one of the accounting equations? Did you get a point just now? What?
Did I? C2.
C2. Exposure. Okay. So,
Oh,
50, 50. Okay. Accounting equation. One of the accounting equations. What? I know. First day back. What? What's one of the two accounting equations? No?
Assets minus liabilities equals equity.
Yep. Where do you want to go? Where do you want to go?
B2.
B2. What is the other accounting equation? What's the other accounting equation? We've got asset less liabilities equals equity.
Income minus expenses.
Income
Income minus
expenses equals
profit.
profit. Yep. Where do you want to go?
C3.
C3. Okay. What's the connection between the two accounting equations? So assets less liabilities equals equity and income less expenses equals profit. What's the connection? Because they all have to balance. lately. Profit goes into equity. So the profit increases the equity amount. Okay? That's how it. What is the acronym? Is it acronym? Acronym for debit and credit. What have you got?
Yeah.
What is-
Foil.
Dead coil. Okay, yep. Sorry. Yep, go. Where do you want to go? Yeah? Where do you want to go? D3. D3. What is the difference between cash accounting and accrual accounting? What is cash accounting first? No?
Handles your money.
What?
Handles your money.
How to lose your money?
Handles your money.
Handles your money, sort of. Cash accounting, you record when you pay and when you receive it. When you pay cash or when you receive cash. Yep. And that's what your accounting is based on. What is accrual accounting? Accrual accounting aligns it with when you actually incur or you've actually earned the income. Okay? So for example, if you have done a job and you haven't been paid for it, you would record that amount in your income statement. If you have, for example, got a phone bill and you haven't paid for it yet, you would record it. You've used the service, you've used the expense in that period, therefore you are included in your accounts. Okay? All your accounting that we're doing is on accrual basis. So last half we did accrued expenses, accrued income, prepayments. There was another one. Can't remember. So there was the 4 of them. Where you make adjustments in your accounts at the end of the period to account for that. Yep. So what is the 3 statements of accounts?
Cash flow.
Cash flow's 1. Yep. You'll get there. Doing really well. Remember this over time. What have you done? So you've got cash flow, you've got do you want me to give you the other 2? Guys? Do you remember what these statements are? Got your cash flow, income statement and balance sheet. Income statement has the income less expenses equals profit. Balance sheet has assets less liabilities equals equity. Okay. Cash flow is just money going in, money going out. Where do you want to go?
D4.
Another explosion. Go. Happy? Good refresher? Okay. So, let's get into the book. We'll be starting a new standard. standard covers job costing. Okay. So job costing is, you have to find out how much a job is actually worth. Okay. When you're in business, you want to know what is profitable and what is not. Overall, you want to know how profitable you are. Yeah? How much income you're actually earning. But you also want to know which jobs are making you money, which jobs aren't. Yeah? Job costing does this. Okay? So it's looking at internal controls, making sure the right expenses, the right income goes to the right job. It looks at the overheads. What do I mean by overheads? Okay. So when you're looking at a job, say you're a builder, yeah? You can get, you know exactly how much income you're actually earning, okay, from that job. From that customer is the money you actually receive. Easy. The expenses, you know how much building materials you use. Yes? Because you go down to the shop, you buy the wood, whatever you need from your suppliers, and that's associated with the job. Yeah? You also know how many hours your builders are actually working on that job, don't you? Yeah? You do a timesheet. The staff does timesheets. You know, so that's the direct costs. The indirect costs are things like your office supply, your administration, person who does debt collecting, all those extra costs that don't necessarily directly associate with that job. But you still have to have them to run the business. Yeah? So it's working out how you're going to divide those costs in association to create to link it to that job. Yeah? Does that make sense? Or have I lost you? It'll become clearer later on. So correct allocation of costs to the job, and under or over applying overheads. Overheads is what I've just described. Overheads is stuff that you can't directly associate with that job, but you still need it to run your business. Yeah? Okay. To get an excellence, you need to demonstrate comprehensive understanding of a job cost subsystem for an entity. When I'm talking about subsystems, you've got your profit and loss account. A subsystem of that is looking at how much your job is actually, the profit you've made from individual jobs. So that's a subsystem. If you add up all of the jobs, will equal what's in your profit and loss. Does that make sense? Yeah? That's how it works. Usually to get 90%, to get excellence, you have to do 90%, get 90%. Correct. Okay. To get a merit is between 75 and 90. To get an achieved is 50%. It is very methodical. There is a bit of writing in it as well, so you have to understand the concepts. I've very quickly gone over the general concept to it. Okay? That's directly out of the achievement criteria. Okay? We have got, I've allocated 4 weeks to do this. We should be able to do this in a shorter time. Okay? You'll do an assessment. The assessment will be a test. It could take a couple of days to do. Okay? With the tests, you'll get 1 go at it. You'll get a remark, a resubmit. Is that what it's called? Resubmit. If you're close. If you're not close at all, then you'll be able to sit another one. Okay? So you'll get 2 chances. But you'll only have a set amount of time in class because we'll have to move on to the next assessment. Yeah? So if you don't pass it, you're going to have to find me an NPLD. Yeah? Book me an NPLD. Does that make sense?
Yeah.
Any questions so far? No? Who uses job subsystems? When I was an accountant, I used that. Has anyone had a lawyer or an accounting or had family who's had a lawyer or accounting team? It is based on time. Okay? You get charged an hourly rate, usually. That hourly rate includes all of the overheads. You are, when I was an accountant, you are judged, you get your bonuses, all that sort of thing, on how profitable you are within your jobs. Okay? So if you can charge all of that allocation, all of your jobs the right amount, and you're profitable in that amount, you get a bonus. Okay? That is what the subsystem's about. If you're a builder, electrician, anything like that, a tradesperson, you will be using job systems. Okay? Because you will give an estimate to your clients, might not be the actual amount you actually charge them. You have to know how much to charge them, how much it has, how much expenses or overheads and all that sort of thing to charge them to make it profitable. Okay? And you have to be able to justify it. This subsystem shows your documentation, your invoices, all that sort of thing, linked back to proving it. So if a client turns around and says, I don't believe you spent this much on it, on my job, you can go back and go, here's the timesheets, here's the invoices, here's all the information, and show it to them. Yeah? Make sense? Okay. Also manufacturing does it as well. So if you're producing the same product, for example, a tin of baked beans, you want to know how much that batch is actually worth. If you're a canning place, yeah, you do baked beans, you do spaghetti, you do cream corn. Okay. You want to know how much that batch has cost you to actually produce. So then you can make a markup, and then you can charge the appropriate amount to your customer and see how profitable it is. You might find that baked beans are more expensive to produce than cream of corn because there's a scarcity of beans and the cost of the raw material is expensive. You'll have to charge more for those baked beans. Does that make sense? If you don't have this system, you don't have this information, you will not know where and when to charge. Why is it important to know where and when to charge? Biggest thing is competition. Okay. If you know the raw materials of the baked beans are expensive or gone up, all your competitors will have that same cost. They will put it up as well, hopefully. If you don't know that that raw material has gone up and you're spreading it over all of their stuff that you're producing, your competitors will not be charging as much as you are for cream of corn. Yeah? So you would have increased the cream of corn, but you're not competitive to your competitors with price. See what I mean? Yeah. Also, like if you're a plumber or a builder or someone like that, you need to know how much things are actually worth. So you can say, hey, the wood has gone up because of COVID. The cost of wood has gone up. Yeah? You can explain that to your customers and say, hey, wood's gone up, it's going to be an extra 10% on what I initially quoted you. Yeah? So it's keeping in track of how much things are costing, also keeping track of how much you can actually charge and your customers. Warning your customers. Okay? It's also the accuracy. Okay? If you're a customer, okay, say you went into the dentist. Yep. You just had a clean. Person next door had a root canal. You get charged the same amount. Is that fair? Would you actually go back to that dentist again? No, because you've been overcharged. Or you feel you've been overcharged. You have to charge what the job is actually worth. If you don't know what the job is worth, then how can you charge it? Yeah? It's also if you're estimating. The last one is this, if you're estimating. Sometimes you know exactly, if you're a manufacturer, you'll know exactly how much it's going to cost you. If you're a builder, you might not, you're estimating. You have to give a pretty accurate estimate because it's very hard to go back to your client and say, hey, it was twice as much as what I estimated. Yeah? They're going to start asking questions. Does that make sense? Costs of manufacturing, or costs of accounting. It's exactly what I've just said. Okay? The cost of accounting is actually figuring out how much it actually costs to actually produce products or the service that you're actually providing. That's including all of the overhead costs. Stuff that is not directly associated with the job, but you still have to have it. You still have to have power, you still have to have a phone, you still have to have the administration person. It also shows you the timeline. How long a job is actually going to take you. So if you are estimating and you know your job costing, you can see how long it's going to take you, how many hours it's going to take you to do the job. And the more you do it, the better estimates you're actually going to produce. So cost of accounting is associated with the financial statements and all of the money in, money out. So cost of accounting is services and all that sort of thing. Cost of manufacturing is looking at when you manufacture something. Okay. It's looking at the raw materials, looking at the process. And when you're looking at the job costing, or the job costing, you can split it into different sections of the manufacturing process and how much it is costing you to do that manufacturing process. So, for example, you're looking at the raw materials, might be the first one. The next one might be cooking the beans. The next one might be preparing the tins, putting it into the tins, labelling them, then shipping. You can look at the different sections and see what's costing you the most. Why is that beneficial to know? Why would you want to know that sort of information? Exactly. You can tweak something very small that doesn't cost you that much to do, has a huge impact on your bottom line. An example that I heard at beginning of the year. Okay? There is guys who, delivery guys, the couriers. They were having a huge backlog of parcels. They had big Samoan guys doing the lifting, transferring the stuff that was coming off the ships or the trucks or wherever they were coming from, putting them into containers, sorting them into containers to be put onto the vans. Yeah? Quite simple process. Get this stuff in, put them in trolleys, sort them, put them into vans. Okay. There was a hold up, there was a bottleneck in transferring stuff from the vans, the trucks to the vans. So the sorting. And what they're finding is later on in the day, these guys were getting really tired. And I'm like, well, that doesn't make sense. You've got these sort of cages, got wheels on them. You shouldn't be tired. What was happening is the wheels on those trolleys were worn. So when you filled them up and they became heavy, they became very hard to move. So the guys who were moving them, after about a 2-3 hour shift into the 7-hour shift, 2 to 3 hours, they were absolutely exhausted. Because the trolleys weren't doing what they were meant to be doing. That was costing the company huge amounts of money, the time. Because they couldn't process the stuff fast enough. It was a $10 fix. They just replaced the wheels. If they didn't know that process, If they didn't understand that process, they wouldn't have been able to pick up where the error was and where the bottleneck was. And look at that pinpoint from a huge process, woe to go, where the bottleneck was and what was the issue in regards to that bottleneck and how to fix it. They could have just put more people on. Would have that actually fixed the problem? No. So those people would have got tired too. So that's looking at the manufacturing stuff. So you're looking at one-off manufacturing, small batches in large volumes. When you're looking at manufacturing, when you've got a one-off manufacturing job, you have to change the whole system of your manufacturing process. You have to change the labels of the tins, you have to change the volume, you have to change your cooking process. And if it's a one-off job, is it actually worth it? Yeah. So one-off jobs are going to be a lot more expensive than large batches or large volumes, because you only have to do that process once. And it's understanding the cost in association with that one-off process. Yeah? It's what the manufacturing costs are. Yeah? Any questions? I'm talking a lot. I know. Yeah? Here's a last one. Last bit. Okay. When we're talking about costs, we're talking about direct costs. What do you think the direct costs would be?
Expensive.
Yeah, expenses. What are you thinking? Direct costs. Directly associated with that job. Okay. So if we're looking at a building, we're looking at what? What would the direct costs be in association with building a house? What's the direct cost? What?
Wages
Wages of who?
of the people working
Working on the site?
on it.
Yep, that's one. Who else? What else? The raw materials? Yeah? The wood? The nails? All those sorts of things? They're the direct costs, isn't it? Something that you can directly link to the job. Indirect costs are also known as overheads. Are things that you can't directly. For example, the oil to, or the petrol in association with the machinery that you're actually using. Yeah? You can't direct, because half a tank in one job, you might go to another job, use another half a tank, you know. Is that really fair? Is that really directly associated with that job? Yeah? Does that make sense? Also, stuff like lighting and heating and the office of your job, of your business. That's not directly associated, but you need it to be able to do your work. That's the indirect costs. So you've got direct costs, indirect costs. Quite simple. You've also got variable costs and fixed costs. Variable costs would be your wood, would be your hours. It varies on every job. You might have a small job that you might just use one lot of wood. Next job you might use 10 trailer loads of wood. on your, with hours, it might take 1 hour to do the job. Might take 100 hours the next job. It varies depending on the job. That is a variable cost. Okay. Fixed costs. It's going to stay the same. Okay. The amount of administration hours I'm going to spend on one job to the next would be exactly the same. Has anyone heard of economies of scale? Economies of scale is, I don't know if I've got a picture of it. Yeah. This is economies of scale here. So with a fixed costs, even if you don't have any jobs, you're still going to have some overhead. You're still going to have an office, you're going to still have administration. You're going to have fixed costs. Yeah? Even if you don't actually have any work. As you have more and more work, that fixed cost stays the same. It's the variable costs that go up. Like the amount of hours you work, and the amount of raw materials you use. Okay? If you divide that, sales versus costs, the more jobs you do, the less per job, per sale it would be. More jobs you do, the less costs. Does that make sense? Let's do an example. Say I've got fixed costs of $100. Yeah? To produce 100 things, I'm going to have a variable cost of 1,000. 1,000. So per unit, it's going to cost me $11. Does that make sense? Lost you so far? No? So that's 100. If I did 1,000 units, so fixed cost is going to be that. This is going to be $10,000. Yeah? Variable cost is the same. Yeah? Total cost is going to be 10,100. Per unit, $10.10. That's how much it costs you to actually do it. That is economies of scale. The more you do, the less per unit it's going to cost you to do it. That's because this fixed cost, it's spread over more units. If I lost you guys, you're looking confused. You're looking confused. No? Got it? Yeah? Got it, everyone? That's a fixed versus variable. Then you've got manufacturing versus non-manufacturing. It's quite simple. Manufacturing, everybody knows what manufacturing is? What? No? Yes? And then you've got Non-manufacturing is usually services. Okay? Like lawyers, accountants, all those sorts of things. Builders, service providers. Alright. Have a break? Do you want to do an activity or do you want to do an exercise? Get off here. What do you want to do? Okay, we'll do an activity and then you can come back and do the exercises. Alright.